I'm Rogier Creemers, Assistant Professor in the Law and Governance of China and Director of the China and Global Cyberspace Project at the Leiden Asia Center. And with me today is Gareth Heywood. Gareth is a self-employed consultant working in investment and high technology issues who recently graduated from our Global Public Economy program at Leiden University. For this project, he has written the report, of which you will find the link in attachment, which looks into detail at Chinese investment in the European technology sector, which of course you're welcome to read and download. Very often in this session, we are, we do a sort of talk first and then we have a Q&A, but I find that very often in sessions like this, questions come up when they're relevant. So feel free, as we're going through the discussion, to post questions in the chat throughout the conversation, and I will bring them in as and when relevant. We will normally have a little bit of time left for Q&A at the end, but just to say, if there's something that comes up that you would like us to go more in depth into, it's not necessary to wait until the end of the discussion. So that's all the practical stuff. Let's now go to the really interesting matter at hand, and that there's a fairly significant amount of Chinese money coming into Europe in search of mergers, acquisitions, and other forms of investment in the European technology sector. And I think it is safe to say that as European perceptions, European public opinion concerning China has declined over the last couple of years, at least according to numbers coming out of Pew Research, as we are more and more aware and concerned of China's position as an aspiring global leader in technology, this question of Chinese investments coming in, particularly in European technology sector, is arousing more and more concern among policymakers, to a certain degree among corporate interests, as well as amongst the broader public, who may well be concerned that, quote unquote, the Chinese are coming in and buying all of the silverware out of the shop. And obviously, as so often, the question is, these concerns may exist. To what extent are they justified? What is actually going on? I don't think it will be a massive spoiler alert when I say that things are always a little bit more complicated and less black and white. And this is then also what we're going to talk about in the next hour. But so, Gareth, you've done the study. There is a whole bunch of Chinese money coming in Europe. Could you give us a sense of those flows? Are we talking about very large amounts of money, or is it relatively limited? And perhaps most importantly, who is spending that money? What are the Chinese companies, bodies, entities that we see are coming into Europe to invest?
Certainly, Roger. First of all, thank you all for attending. So to give you a sort of overview of the investment flows that has been received by European companies since around 2009, we've seen a rough total of approximately 160 billion euros, a proportion of which has been, as we're all here today to discuss, has been received by European vendors working in emerging technologies and advanced technologies, spanning a whole range of subsectors from semiconductors to artificial intelligence, cloud services, telecoms even. 5G infrastructure has obviously been a bit of a buzzword in the last 2 or 3 years for that reason. And we actually find that there are, generally speaking, in a broad sense, there are 3 types of investors arriving from China, if you like. The first are probably the most obvious and in some senses the most sensitive and controversial, and they're SOEs, state-owned enterprises, which are effectively the oldest type of company entity existing in China. These were originally set up as conduits for industrial production at a very low grade in China's own domestic economy. And since around the late 1990s, with their Go Global policy, they've sought to expand their footprint across the world in various industries. And that all centers around the strategic objectives and aspirations of the Chinese Communist Party. And it's, to a degree, a collective aspiration of the Chinese people themselves to be successful and affluent. That necessarily follows that everything that's done in terms of, virtually everything that's done in terms of foreign direct investment outside China by these companies is in line with China's industrial policy, sort of known today as Made in China 2025, or their innovation and digital strategy for 2030. And then ultimately it ties into their 2050 vision for China. And that's characterized by an aspiration that's now being referred to as a dual circulation concept, which is effectively the desire to simultaneously reduce dependency on foreign entities for technological know-how and expertise and even management structures, and equally simultaneously enhance the domestic capability of the companies that exist within China's domestic economy. And technology is really, advanced technology is really at the forefront of that. One place that they've already had a lot of success is artificial intelligence, but very neatly, one area which is essential to actually creating any applicable products in artificial intelligence is the neural network processors, which are a form of semiconductor chip, which is something that traditionally China has never really managed to catch up on in terms of expertise and actual production capacity. So that in a nutshell really sort of explains who the SOEs are and why they're here in Europe, but not just Europe, absolutely in the United States. You see their presence in emerging markets across the globe. The second group are a bit more of an ambiguous company entity. I refer to them in the report as state-powered private enterprise, but I've actually sort of in recent times come to the conclusion that they're more of a state-private hybrid. So rather than just sort of declaring them a company that is private in legal terms, it's a private enterprise in legal terms, but it receives seed capital or subsidies, beneficial subsidies from the state. It's really more of an ambiguous ownership structure whereby they are effectively private companies, and they may also be offshore. They may not be domiciled in China itself, but they can carry out the objectives of state-owned policy banks like the CIC, and they do so under the auspices of being independent. So that's where we have the more sort of ambiguous, I wouldn't go as far to say shady, but sort of obscure company entities where we're not really entirely aware of who's pulling the strings, shall we say. And then the third group are also very familiar to us now, particularly in the last 3 or 4 years, and they're the private enterprise sort of national champions. So you immediately turn your attention to the likes of Huawei or ZTE. These also include, beyond sort of the area of telecommunications, you have the likes of Alibaba, Jack Ma's behemoth of a company, and the Ant Group therein. And what we find with them is, in a very familiar sense as private enterprises, their objective is their commercial outcomes. Their investment overseas is about growing their global footprint. It's about acquiring know-how, and it's acquiring access to new markets to be a truly multinational corporation. The one payoff with being one of those kind of enterprises is that really your behavior is completely accepted, and even their domestic market dominance in China is tolerated, provided that they don't really step on the toes of the CCP, or more importantly, President Xi Jinping. As many of you who've probably been observing the news will have realized in the last 6 months or so, when Jack Ma openly spoke out against the party and against policy, and then wasn't seen for 43 days or something like that. And then when he did reappear, he gave a very heartfelt apology and even thanked them for finding the Ant Group for his misdemeanor, shall we say. So I think in a nutshell, that's what we're dealing with here. I don't know where you want to take it from there, Roger, but that gives us a good introduction to the actors we're dealing with, I suppose.
Yes, and so to a certain degree, what we can say is these are companies that, regardless of their ownership structure, there is a strong sense that there is such a thing as a Team China, quote unquote. And as you said, also private companies are supposed to be good corporate citizens. But at the same time, one of the things that we always see with China is that there is a centralized national policy, an economic development policy, a sort of industrial strategy. But at the same time, we see that very often holds at a very high level of abstraction, but that once you sort of dig down into the details, you find that these different categories of investors do in the end have different imperatives, different objectives, different purposes. And I'm wondering, to what extent is that something that we see in their investment in Europe? Do we see, for instance, differences in the sort of investments or the targets or purposes of investments made by state-owned enterprises in comparison to, for instance, private enterprises?
In short, yes. You find with state-backed or rather state-owned enterprises, all of their acquisitions, bar some offshoring of large amounts of money, which I won't bore you with, into banks and the likes, as investment, this passive investment decisions, consist in categories we would consider, I suppose, now sensitive, telecommunications being an obvious one, and 5G infrastructure. And then equally, another sensitive industry, which I've touched upon, which is the semiconductor industry, so computer chips, because that's very much an imperative area for achieving their aspirations with regards to becoming an AI superpower, as it were. And then you also see them dip into actual artificial intelligence companies that exist outside China, whereby they can perhaps learn from or expand upon the efforts of non-Chinese developers and grow something offshore, because that's a priority too. There's no question about that. This is not an attempt to build a new Great Wall in cyberspace. It's about achieving commercial outcomes as well for the state as much as it is for private enterprise. On the part of private enterprise, the results are a lot more varied. You can spread it any which way. There's various ways to slice up emerging and advanced technologies into different categories. None of them are particularly perfect, but you do find that there's a much greater array of investments. And generally speaking, when you trace back the company that they've either purchased or acquired, purchased outright, or acquired a share in or an interest in, it usually can be linked back somewhere to a statement from a CEO of, say, Midea, the white goods manufacturer, or even Huawei, with regards to expanding their infrastructure offshore. So there was an example with the Artisans company in Germany that were bought by Alibaba, I believe. I could be wrong with that, but the point still stands, was that they're related to e-commerce and smart AI platforms for actually managing sales. And that acquisition was essentially providing themselves with an existing company that had a foothold in the European market and allowed them to connect their goods and join up the dots in the supply chains and so on and so forth. So that gives you an impression of what they invest in and why, really.
Yeah, and so I'm wondering, can we say anything in general about, are these companies, what is it that they are trying to acquire? Is it intellectual property in the sense of advanced technologies that they do not yet themselves have? Or is it sort of more things like manufacturing capabilities, particularly if we are looking into Germany, as you say? Or is it sort of like a market presence or a brand, as in the case of Volvo that was acquired by Geely? Is this something that we can say anything general about, or is it all of the above and you'd really need to look at the individual firm and the individual investment decision?
I think you've hit the nail on the head. It's a case-by-case process of examination, really. It's usually relatively self-evident when you look at who the investor is and then what the target asset was. So, for example, I've just given the Artisans example. That's about expanding your e-commerce platform. But, for example, with Linxens in France, they're manufacturers of cutting-edge biometric technology, and they also produce hardware and various conductor circuits. And then, say, for example, the purchase of Amplion, which was a spin-off of NXP Semiconductors, which are housed in the Netherlands, of course. That was a case of buying into cutting-edge technology, but not to extract it, but rather to profit from it, because the radio frequency industry is already vast and growing. In the case of Amplion, to just give you an example, the technology that they produce is absolutely essential to all the devices that conduct 50% of the world's mobile phone calls. And it's only a market that's growing. So from the perspective of the investor at the time, which was JAC Capital, it wasn't that they actually actively wanted to manage this company and sort of take control of it or strip it for parts and bring all of the technology to China. It was a case of buying a company that's is already profitable and will continue to be even more profitable in the future. And that's actually one of the state-owned investment funds in an asset management company. So that gives you an idea of kind of the ambiguity of some of these purchases.
Yeah, and I like how you go into a number of companies, particularly here in Europe, that aren't, how shall I put it? Many of the companies that you've been discussing aren't necessarily well-known consumer brands, and that also tells us something about the ecosystem. And I'd like to come back to that in a moment, but before I do, there's a question in the chat from Gabriel, who asks, we were talking a little bit about the relationship between the Chinese state and its private companies, the national champions, where on the one hand, obviously the Chinese government has been very much supporting these national champions, but at the same time, we see that recently they've come under increasing fire, amongst others with anti-monopoly legislation, new forms of competition law enforcement, but also, for instance, you were talking about the spat around Alibaba, which really was set off by Alibaba's attempt to list its financial subsidiary and financial on the stock exchange. And that listing was withdrawn at the 11th hour after a very quick change in the Chinese regulatory landscape for financial services. And that really, it cost, I don't know exactly how many billion it cost Jack Ma personally, but a lot, as well as a whole bunch of other investors. So clearly, we equally have a central government who isn't above or afraid of inflicting quite a sort of a big slap on the wrist on some of these businesses. So how do we evaluate that relationship? What does it look like? What is driving this in your perspective?
I think in the case of the national champions, shall we say, there's a very good book on it, which came out a couple of years ago called China's Disruptors. And it explains this kind of rags to riches, rapid development, the ability to not only learn from foreign technology, but take it one step further and innovate in their own right, and so on and so forth. It was something that actually took the CCP very much by surprise, even from like the early stages of the sort of mid 80s, when things were getting underway, as it were. And it was a sort of unwarranted success story that they could actually sort of put on a platform and say, aren't we clever? even though they didn't really intend it. But now these companies have reached a critical mass. They are champions, not only in China, but they now have a significant footprint across the globe, depending on what they do. And it is complicated when you look at the likes of Huawei and ZTE with the contracts that they've signed across the globe to create or lay undersea cable or develop onshore 5G infrastructure. They've received an awful lot of assistance from the state. And companies like that have a necessary scale, whereas the likes of Alibaba are not so strategically important to the objectives of the CCP. In terms of e-commerce and the like. It's impressive, but like as you mentioned with the Ant Financial, that's something they're very wary of. So I actually think an answer to that question is the relationship is partly based on size and influence and power. It's economies of scale in its purest form. A company like Ant Group, with its global footprint, I mean, they're one of the main sponsors of the European Championships even. Their exposure to the world now gives them an awful lot of soft power. They're recognizable. And that, in essence, is a threat to the CCP. People who exist within the Chinese domestic economy who have enough resources to feel confident enough to challenge them. And I think that that's really where this dynamic has developed in recent times.
Yeah, I think that's right. And I think we also need to see it again, you know, we would very often like to think, in my own personal view, that China has some sort of a monopoly, that all noses always point in the same way, or at least are supposed to point in the same way. That's not necessarily how it goes. I mean, you know, governing any country, but particularly one as large, as complex, and as rapidly developing as China, just has inevitable trade-offs. And choices that need to be made, to which there is no clear cut or ideal or optimal answer. And, you know, very often we'd like to sort of turn this into a story, into a very nice story where, you know, Xi Jinping individually is angry at Jack Ma or jealous of Jack Ma because he's too popular. And so, you know, he goes after them. And, you know, maybe that's a contributory factor, but there's so much more there. In terms of, right, why do we see intervention in the financial sector? Well, because we're seeing we're seeing an economic discussion which focuses on putting the real economy front and center and keeping the financial system in its place, right? China has learned a lot from our financial crisis in 2008, which is that you shouldn't have a financial system that can destabilize the entire real economy, right? You need to limit that. Same thing with anti-monopoly legislation. China wants to innovate, and it has identified that there is a risk that the incumbent position of these companies is endangering innovation itself, right? It's easier for these companies to just buy out a competitor that might threaten them, or any sort of new startup with new technology, just, you know, because they have that money, and then they don't need to improve their own product. They can just sort of buy up any spec on the windscreen. And obviously, given the fact that Beijing wants China to become a leading technology power, you cannot really have large companies who would block innovation like that. And it's just all of these holes in the Swiss cheese then line up at a point in time where the stars are aligned, and suddenly we get this action. But at the same time, indeed, you know, these companies are still strategically very, very important. But then to move to the point where we were, there seems to be something really interesting going on, and that is that the digital sector it's getting into the public view. It's becoming very prominent, right? In the same way that a year and a half ago, none of us knew what an R1 ratio was. now we've all become amateur virologists, and we sort of, you know, in our social conversations, we compare which vaccines that we've had, and we talk about efficacy rates and so on and so forth. But we start to see a similar thing with technology. A couple of years ago, very few people knew what a semiconductor was, let alone that you could produce them at various nanometer scales, let alone that you had a company like TSMC in Taiwan, or companies like ASML here in the Netherlands, who have monopolies or are part of oligopolies in their own sort of bits of that ecosystem, simply because the technology is so complicated. And it seems that increasingly we are starting to understand a bit the enormous complexity of this technology landscape, which you also mentioned, right? What we were discussing just now, and also the report, which I invite everyone to download. It has a lot of, it really has a lot of really interesting examples, but usually they are about companies that aren't really household names. Right? We all know Huawei, also because they make mobile phones and we can buy them. But very few people in comparison know companies like NXP or TSMC or ASML. And we now see China sort of operate in that ecosystem. And to a certain degree, there is a question, you know, to what extent does this potentially signal that China is seeking some sort of controlling stake or dominance within that ecosystem, or even a sort of ability to move towards autarky? Is that something that you see in terms of an intention? And if yes, is it something that would be possible?
That's a very good question, and I think a very timely one. Do I think it's possible? Theoretically, yes. And I think one of the key factors that's involved in that process, and particularly when we draw it back to with respect to investment practices, is that under the banner of a state-owned entity, the investment time horizons are a lot longer than they would be for a private enterprise, particularly publicly listed private enterprises, which are susceptible to shareholder pressure, the need to see revenue growth at a constant rate, and an ever growing profit margin and the like. But then if we look at the semiconductor industry, it just seems virtually inconceivable that we'll see it anytime. We certainly won't see it anytime soon. And I think the companies you've touched upon, particularly ASML and TSMC, are the case in point to this. And even their geographical location, I would argue, illustrates the point even more and reinforces it. One is in the Netherlands and one is in Taiwan. But then the people who generally use the services of TSMC most often are Apple in California and Nvidia. So what I'm getting at is that really what China is trying to do is take what it believes is ultimately its rightful place and its natural progression into the higher end advanced manufacturing segment of global technology value chains. Because there's no question when you look at the world's trade relationship with China, there is no suggestion, and I think this narrative of decoupling, which we could probably touch upon after, is very much a narrative fallacy, in the sense that there is no indication in any data anywhere really that imports and exports are somehow shrinking, that China is closing itself off to the world because it's gradually getting better at doing everything itself. That's not the case. And I don't believe that it's even desirable to them in terms of trade. Why have a closed market of 1.4 billion consumers per se, instead of 9 billion, or by the time they reach 2050, who knows what the world's population will be, and how advanced the vast amount of the world's population will be, and how many of those will be middle-class consumers, and to me, it just doesn't seem to make any sense. And I think there's a lot of scaremongering around that. On the flip side, there is definitely an attempt to enhance its capability domestically to serve its own purposes and solve internal problems. So that's a very basic, purely logical decision on the part of the CCP. So I think that would probably answer that question.
Yeah, and I think that's really interesting. Indeed, also in the light of what we are saying about decoupling, in the sense that I do think what is happening is that there is a sort of structural readjustment to where China isn't necessarily trading less, but it's trading different things with different people as its own economic structure changes. And you know, once upon a time, China would import raw materials and it would export stuff, and generally fairly low added stuff. And we're now at the point where China is shedding a lot of that low value added manufacturing to places like Bangladesh, for instance, for apparel, and other countries in the region, because China's learned that, you know, it's a useful stepping stone, but it's not really how you get rich. So we want to sort of move up that value chain, and we want to restructure, therefore, our trading patterns. And I'm wondering to what extent this is really what we're talking about. It's that, you know, in the same way that the Chinese government didn't quite expect or was a little bit surprised by the rapidity of technological development, that we were a little bit surprised by the rapidity of China's development, and that therefore we haven't really sort of mentally prepared for a China that suddenly would become much more of a horizontal competitor, a China that would actually sort of, you know, not just be a supplier of cheap household goods or you know, cheap things filling the shelves of department stores, but that could also be a more full-fledged participant in that global technological ecosystem. And obviously that's where then the whole discussion comes in about values and risks and threats. But indeed, if decoupling so far isn't really happening, except in a couple of very prominent and valuable, but also localized areas. We could talk, for instance, about the American export sanctions. Not that many chips, not that many advanced chips going to Huawei these days. But apart from that, if what we're seeing is mostly business as usual, or at least business as it has been evolving without fundamental change, but at the same time, a greater political salience of these discussions of investments in technology. What then can we say about risk? Where obviously the million-dollar question is, should we be as scared of China as we are?
My immediate retort to that would be, when you refer to China, who and what are you referring to? There is a vast difference between the aspirations of the CCP and Xi Jinping himself, and however they wish to pursue that. And of course, we've seen they pursue that in a very multifaceted way, whether it's disputes in the South China Sea, which is a very sort of hard security, military, complex type issue, or it's retaliatory sanctions against the United States. I mean, a good example is actually, it's more of a blanket retaliation to some of the more belligerent acts by the Trump administration, but the foreign investment law that was established in January last year, which essentially allows reciprocal measures and restrictions on or against entities of all types who are perceived to be discriminating against Chinese investors outside China, to take one example. But in terms of to go back to, should we be scared? I think we should be sensible. I think we should be rational. We should look at people's actions, and that I say that for both state-owned enterprises and private enterprise, and the Chinese state machine, if you like, from the perspective of actions definitely speak louder than words. And in some senses, our own narrative that we've created around being more hawkish about Chinese investment and the Chinese objectives as a state and as a people have actually obscured the observed behavior of Chinese investors and Chinese companies around the world, which is only leading us to make strategic miscalculations. If, from a policy perspective, we decide to buy into the narrative that China is just trying to take over the world, in very layman's terms, because sometimes you read some articles and you can do nothing but shake your head, really, because they're that sort of fanciful, then you will start to be more punitive. You'll start to be, frankly, petty in some senses, and ultimately you'll be counterproductive, because there's no question, when you look at the companies in European tech, the vast majority of them welcome and actively court Chinese investors, if for nothing else but market access to the Chinese domestic market. And they're not really interested in becoming, it doesn't mean that they're going to become supplicant to Chinese companies or the Chinese state. It merely means that they're actually trying to make sort of native European tech more prominent on the global stage in that ecosystem that we've already discussed. Now, that doesn't mean that we should throw caution to the wind and just allow anything to happen. You should do your due diligence at all times, and I take that for the business community, for academia, and for policymakers. I would say the same thing to all of them. Don't be stupid, but also don't jump the gun and over-perceive threats. I think the narrative has basically led us to believe that Chinese companies are a threat. Well, they're a threat in practice rather than principle, whereas I think that the inverse is actually the truth. They're really a threat in principle, because you could game theory out all the possible outcomes, but in practice, there is no real behavior, bar a few incidents. I mean, ASML were obviously hacked, there was espionage cases and so on and so forth. Bar that, the general rule is that the narrative doesn't fit the practice.
Yeah, thank you for that. And you bring up something that I think is very much worth looking at, and it's sort of the role of companies that are invested in here in Europe by Chinese investors. Very often we talk about it as China versus Europe as a sort of nation-state thing, a nation-state relationship. And again, it's a little bit more complex than that. Here we have these European companies that are actively soliciting Chinese investment. So can we talk about them a little bit? What is attractive about Chinese investments? What does it allow European companies to do? How does it allow them to develop? What are therefore benefits associated? And what would the cost be if if Europe were to lose that wholesale?
So the primary motivator, as we've touched upon, is in terms of objectives, is access to the Chinese market. We've already touched upon that. But in terms of actually achieving that, generally speaking, or historically speaking, the only way to gain that access is through some form of joint venture. Now, that can be creating an entirely new company that is part owned by a Chinese vendor and part owned by a European vendor, and you pool your resources and your knowledge, and you sell products in the Chinese market. So that's one example. One of the other examples has been greenfield research projects and joint research projects, which may not necessarily take place as it were, in China, but you can bring Chinese resources and expertise into your own work. I know that I think going forward, that will be particularly appealing to people working in artificial intelligence, because a lot of the innovation in that area and the pace of innovation is taking place in China rather than in the US, where it's much more established that they're the predominant force in that industry. But that is in a nutshell, the driver behind sort of receiving investment, if you like. It unlocks doors. And I mean, on a practical level, in terms of actually doing business in China, it very much helps to have someone or members of management who know the lay of the land. They have contacts within the Chinese Communist Party itself. If you're in a particular province, there are people who are on the ground, stakeholders who can open doors, but also kind of grease the wheels and so on and so forth to actually get things rolling and really ultimately create positive commercial outcomes for European vendors in that market. I think that we've actually seen it on a sort of side note recently, that there are new developments in terms of companies being granted access to full ownership in the Chinese mainland, particularly not to do with technology, but Goldman Sachs and BlackRock have now been allowed to open branches in China that it has no ownership from any Chinese entity. But then on the flip side, the bottom line is, will they make a profit, and can they do it without the right kind of personnel? And is it possible to acquire those kind of personnel without courting some form of joint venture? I would say that's probably the answer to that.
Yeah, and again, you know, there we do sort of come to a very interesting point, which is that whole question of reciprocity. I think we can safely say that the Chinese market is in a number of areas a lot more difficult to get into than the European market. So I do think there is a question there to what extent it is desirable and feasible to remedy that situation. But obviously that is a very big political debate that we're not really going to be able to deal with here. And let me remind our audience that it's still, you know, feel free to ask any questions in the chat as we go along. But my last question straight away would be, so what should we do then? You talked about things like due diligence, and obviously that works at multiple levels. At the corporate level, you know, corporations want to do due diligence to make sure that the partner that they're embarking on a joint venture with or any sort of project with is bona fide. But there are obviously also questions, and increasingly so as technology becomes more recognized as a component of national security or the public interest, whatever you want to call it, for having some sort of investment review scheme. And so having done the study, in your view, particularly, you know, taking those two levels, at the corporate level and at the government regulation level, what is it really that companies should look into when doing those due diligence processes? And what is it that governments should really try to regulate for and then look into in reviewing Chinese technology related investments? Okay,
so on the corporate level, I think that perhaps the key issue is, first of all, ultimate beneficial ownership. So in brief, who you're getting into bed with. And as we've already touched upon, that can be incredibly opaque in terms of actually discerning who you are talking to, or who's driving the narrative, who's driving the objectives of the potential investor. And in that sense, that's something that companies will largely struggle to do on their own. There are people out there who are trying to help them. So that's number one. Number two is understanding where you stand from a regulatory perspective. Now, not necessarily, I mean, obviously you're going to have to comply with Chinese regulations if you want to be in China, period. Everybody knows that. But on the flip side of that, the same goes for Europe. And we all know how much the EU likes to provide us with a raft of regulations on pretty much everything, not to mention national governments. So you need to understand where you are in terms of whatever it is you're selling or manufacturing and transferring to those markets. Is it sanctioned? Are you allowed to do it? And then secondly, is what you're producing, which can often be the case in emerging technologies, is it sensitive for, as you touched upon, dual use and the likes? And this is where all of this, does it have military capabilities potentially if it's put in the wrong, let's say it's put in a missile rather than a TV or an iPhone? Are you vending something like that to the Chinese where it could have potentially be appropriated by the Chinese state? But then again, that reiterates my first point that beneficial ownership is therefore essential, knowing who you're selling to or who you're selling with. From a policy perspective, this is a very disjointed area. Investment screening mechanisms are, in Europe and the UK, incredibly varied in terms of their depth, their objectives. Obviously, generally speaking, I think I could speak for most policymakers in most of the European states when they say that they would rather not have an investment screening mechanism that openly allows companies to sell dual-use technology that could end up in weapons of war, if they can avoid it. But then again, when you look at the United Kingdom's track record with selling weapons of war to all manner of countries, then perhaps it's not that clear. The other problem is that despite the new guidance from the European Commission on investment screening practices, they haven't actually enforced any sort of collective process. There's no checklist, as it were, as to what really constitutes critical infrastructure or critical technologies. When you look at the list they do provide, it literally includes everything and nothing. And then ultimately they leave it up to the member states to determine for themselves. So I would say what you need to do as member states is really sit down and think about the objectives that you have. So economic security is an imperative, and that requires having a prosperous and innovative and competitive domestic economy with access to international markets. And in that case, it's a no-brainer to help your companies deal in China if you can smooth the process out for them and help them receive ready investment where it's applicable. But then you also have to balance that with more hard security, technological security, cyber security, and notions that opening the doors perhaps too widely or the windows perhaps, you're always going to get some mosquitoes, as one former premier pointed out. So it's necessary to balance potential threats to your sovereignty, to national security, with a desire to allow business to flourish. I think they're the 2 points that should always be on the minds of policymakers. And like I say, they need a formulaic approach to how they evaluate investment proposals. That needs to be done on a case-by-case basis, because as we've already touched upon, there is no real rule of thumb. And then lastly, I also think that there needs to be more work done by policymakers and collectively with academia to try and examine and understand the competitive effects of a Chinese presence in a domestic market overseas. So the Dutch economy could be an example. Is it actually impinging on the ability of the native technological companies to compete globally, but also domestically? And also that then allows them to consider further investment controls, sort of tightening the tap, as it were, in certain occasions, and in other cases allowing everybody to have a bit more of a free-for-all, shall we say. So that would be my conclusion on that point.
Yes, thank you. And let's see if there are any questions from the audience. Feel free to enter them into the chat. We have about 10 minutes left. just to give people some time to write, but then giving some sort of, or coming to some sort of broader reflections on this field. The complexity that you illustrate is really, I think, characteristic of the moment in time where we are, where we did have this sort of fairly simple structure where Western companies essentially ruled the technology field, and that is no longer the case. And so we go from a world of simplicity into a world where we need to be far more careful in all of these things, and we are going to be confronted with costs and trade-offs that we really haven't had to think about in any depth thus far. So is it really a case that we can say, the era of the free lunch to a certain degree is over? Would that be a correct assessment?
I think we're just dealing with more competitors now. You could argue that given Europe's position technologically in terms of manufacturing advanced technologies vis-a-vis the United States, we've always played second fiddle. And in that case, that's not a free lunch either. And it's not been considered inconsistent by American policymakers to prohibit incursions from European companies and vice versa. So I think the field is now a little bit broader in terms of who we've got to get in the ring with. But I think that can only add to the vibrancy of the ecosystem itself. I think that any notions of techno-nationalism or building walls and trying not to do business elsewhere and in other theatres is pretty fanciful.
Yeah, indeed. And there's, of course, the big difficulty of and obviously everything in the end is a manifestation of that big question. How do we deal with China? How do we deal with a country that isn't evolving in the way that we think it would, in a country that clearly does not share many of the values that we hold dear, and indeed is carrying out quite a few activities that we don't necessarily agree with. But at the same time, as you discussed, a country where many businesses also do normal things, where businesses also seek profit, and where, it's not that the political campaign is always number one, or that this is not comparable in any way. How does one find that very narrow stretch of pavement where one can make sense of what is going on, and one can develop a clear-eyed and pragmatic solution to these complex problems without falling off, as it were, or falling into any or other extreme with all kinds of possible consequences?
That's a very good question. I think pragmatism is the word of the day, because it's certainly the tack that is often adopted by Chinese policymakers and Chinese corporates. Being too rigid in our view of China itself and our view of China in the world and China in Europe and vice versa will lead us to fall behind, I suppose you could say, in some respects. Not facilitating our own sort of European vendors to, sustain a pace of innovation and commercial expansion that the Chinese have actually done. The Chinese policymakers have actually done very successfully in the last 20 years. Would be an error. But unfortunately, I don't think that the zeitgeist of how the European Union itself works is particularly in favor of such a more agile approach to this topic, to be honest.
Exactly. And with that, we've pretty much come to the end of our time. Thank you to the audience for being with us today. Thank you to Emma Burgers, who's been helping out with technical support behind the screens. And it's not because she's not visible that she isn't very, very supportive. So very much thank you to you, Emma. But most of all, thank you very much, Gareth, for your report and for a very interesting discussion today. If you want more information about our cyber program, feel free to visit the Leiden Asia Center website at leidenasiacenter.nl, where you can see not just all of the stuff that we're doing with the cyber program, but everything that the Leiden Asia Center does in all of its very many areas of interest. And see you next time.